First of all, let's start with Disney. And a basic question. At this point, as an investor, do you invest in Disney as a tech stock or a media stock? Because as you and I both know, the multiple is quite different.
Yeah, I mean, when you think about what investors are excited about, they're starting to look at, yes, 116 million in total subscribers globally, which compares to Netflix at 200 million. So they're getting up there. If you look historically, Disney was trading in the same neighborhood as Netflix and Amazon, really in the 50s. Going forward, it looks like they're trading at around 37. If and some of that just has questions about their ability to execute. With Bob Chapek in place, who Bob is incredibly exquisite at execution, there's a lot of upside in the stock. If they were to hit the same kind of multiples as Netflix and Amazon, you're talking between 30 to 50% increase in shareholder value for this company.
But Michael, that raises the question of there's a lot to the Disney company beyond streaming. They have the theme parks, they have the cruise ships,
Yeah.
they have a television network after all, things like that. Is that ballast that sort of rights the ship if it might go off, or does it limit their upside? Because when you talk about Netflix, for example, they have pretty much all their eggs in one basket, which is the tech basket.
Right. Disney has a great deal more to play with and a great deal more to underwrite their risk from streaming. The fact is that the parks are back. Delta or no doubt Delta, we should see a stunning recovery from in the parks. A lot of other places in their business are doing well. But let's remember, compared to Netflix, they have licensing and merchandising. Yes, they have the theme parks. They can create other shows, they can create other networks. So they're fundamentally in a better position than Netflix. In a lot of ways, they're similar to Amazon, which is streaming is only part of the picture and the revenue mix.
So we've been talking about Netflix and Amazon and Disney. There are some other players out there, right? We have people like Comcast, for example. We have Viacom, CBS. We got other players. Discovery, goodness knows, which is going through a big transaction. So what is the future of the business overall? What sort of consolidation might we see? After all, I think Disney got there in part because Bob Iger really bellied up to the bar and bought all those assets from Fox.
Well, he bought the assets from Fox, but he also bought Lucasfilm with Star Wars. He bought Marvel with the entire Marvel cinematic universe. And so you see, what we're going to see is a continued and consolidation frenzy among the major media companies. If you look over time, what's happened is every new wave of technology has driven changes in the composition of this industry, but it's actually increased revenue in the industry. So you some of the things that are driving it is the growth of streaming, but it's also some others. One is the decline in cable, and cable's been the driver of revenue growth and profitability in all these companies. Increased rise of connected TV. Within a couple of years, practically every American home will have a connected TV, whether it's a Roku or it's a Vizio. And but also it's this need to compete against Amazon and Google and Facebook and Apple. And so we're going to see a lot more consolidation. Each of these companies, one way or the other, is going to have their own streaming services. I'm very upbeat about what Warner Discovery will be able to do. I believe that between Discovery Plus and HBO Max, they will also get to 200 million subscribers worldwide.
So, Michael, much or all the consolidation thus far, I would say, is within sort of the media space. And even today, there's talk about CBS, for example, and Comcast. Should they get together at some point? What about even outside of that space? People say maybe Apple should buy CBS or buy Comcast or something. Do you expect it to go beyond just the four corners of the media world as they consolidate in the streaming world?
Yes. First of all, we see Amazon's $8 billion acquisition of MGM, and once approved, it gives Apple access to a massive library historically of shows and also the ability to produce going forward. But I expect that every one of the technology companies will, one way or the other, find themselves into production, either television or films. And the result of that is they're not going to be able to build these services just on new production. They're going to build a lot of it on libraries. And if you also look at the amount of money that each of these companies are spending, Apple TV Plus is costing billions of dollars a year. It is really a part of the entire Apple ecosystem and supports so many other things. So we will see mergers between these companies. And given the valuations, once you move away from Disney, they're easy to pick up. In some cases, there are a day's volatility of a stock in terms of being able to buy these companies.
Yeah, no question they could afford them, but at some point, don't you have to get back to the fundamentals, things like earnings per share and dilution? I mean, I take an Apple, just to pick on Apple for a second, they have enormous margins. If they go into the production business of movies, you know that business, I know that business, boy, your margins are not that great necessarily.
Well, they're already in the business, and it's so small. It's just not significant to their overall profitability. But it's also key to their app store and service revenues, which have been so important, especially as the sale of devices seems to slow down. So I think that they're in a better situation than any of the media companies, which are today trading at multiples like 10,
Right.
and do have challenges in terms of being able to spend operating money in terms of ramping up production. That hasn't stopped them. I mean, Viacom CBS just did a $900 million deal with the creators of South Park to do a whole new set of series. Everywhere, every which way, we're going to see more money spent on the production of entertainment.
But Michael, you have the history in this business. Sooner or later, doesn't the money go to the talent? I mean, let's talk about Scarlett Johansson, for example. She's not a one-off here. A lot of people are going to be saying, wait a second, I'd like a piece of that streaming action.
The streaming action, it's going to go to the talent, but also it's going to go to the people that are producers of programming. And so, Hello Sunshine, Reese Witherspoon's company, which is behind shows like Big Little Lies and Apple TV's The Morning Show, just sold for close to $1 billion to a new company, ironically owned by Kevin Mayer, the former head of business development and strategy for Disney, and Tom Staggs was the former COO of Disney. So we're going to see a lot more, and it's going to be other production companies that are going to be for sale. A24 is rumored, Lionsgate. So it's going to go to the talent, but it's also going to go to the content owners.